Hit it.
It's Friday, July 29th, 2022, episode 189. I'm Patrick Ceresna.
And I'm Kevin Muir. Trigger warning, it's only Patrick and myself on this week's show, so if you're looking for some insightful market comments, better hit delete and wait until next week. But for all you crayon chewers, don't worry, Patrick will read the tea leaves and tell us what he sees in talking charts.
And we then end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. And we've got a great show. And Lena, hop on. What beer am I drinking this week?
This week you're drinking Robinson's Brewery's Trooper Premium British Ale.
The reason we're all laughing is because we're taping this at 6:30 in the morning, Friday morning.
It's 5:30 for me.
5:30 for Patrick. And Lena and I tapped out and said, there's no way we're drinking beers that early. And Patrick's like, I'm doing it for the show.
I'm doing it. I'm being a trooper, the name of the beer. Like, you know what? I saw this and I was like, listen, we haven't done this beer yet. Like, so.
It's a crazy ass beer,
you know,
it sounds like.
As a kid, I used to love Bruce Dickinson of Iron Maiden. And the fact that
let me read the little blurb about the beer so people know what you're talking about.
You said, as a kid, I thought you were going to say, I love morning beers.
That too.
Okay, so Trooper is a premium British beer inspired by Iron Maiden and handcrafted at Robinson's Brewery. Malt flavors and citric notes for a unique blend of Bobek, Goldings, and Cascade hops give this deep golden ale a subtle hint of lemon. Trooper takes its name from the Iron Maiden song, which itself was inspired by the famous Charge of the Light Brigade. A real ale enthusiast band vocalist Bruce Dickinson has helped develop a beer with a true depth of character.
Is it living up to everything?
Yeah. Oh, yeah. It's nice. But yeah, he's such a cool guy. Like, you know what? Do you know that he's a pilot? He got his full pilot license, and then he had a number of commercial airlines he bought, and he called them you know that character from Iron Maiden is called Eddie, so it's Ed Force One, and he literally once piloted I think it was the Liverpool soccer team, if I'm correct, to a game.
Like he did it himself.
Yeah. Wow.
This is that's hardcore, man. He's
everyone check your pilot. It could be the guy from Iron Maiden.
Anyway, all right. So
let me do the side effects before we go. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include gametal warts, swollen arteries, or the real rate rash.
Oh, I've suffered for a few of those. But
go see the doctor. All right.
Let's move on.
Okay, Patrick, we're getting right to talking charts.
Well, listen, let's quickly go through the top three things we were watching last week. We were watching whether or not the fangs could turn. It's interesting. I'm just going to pick on Microsoft, which had its earnings. We could spend some time on some of the earnings announcements. But Microsoft had a really nice turn up. Obviously, the whole market, we'll talk about the whole market turning up. But, Apple is doing half decent on the short term. But you go to stocks like Google, they still haven't beaten out of their trade range. Amazon still kind of, Amazon's setting up like it could go, but it's been a mixed bag. Other than maybe the big breakout on earnings on Microsoft, it really has not been where there's huge momentum. Apple actually has recovered pretty half decently. It
could be worse, is how I look at it.
Yeah.
There's a lot of people expecting these big tech fang mat to really shit the bed, and they haven't. So I think that from that perspective, you could say it's been a win.
Yeah, for sure, and it's been mixed, right? Because there's certain ones. I think that the term FANG will dissolve here, and they're going to start looking at because they're not all going to move in unison. I don't think anymore. You're going to.
That's a great point. We might finally forget about that term. Well, they've changed it. It used to be FANG, and then it changed to FANG mat. There's probably
but now Facebook isn't Facebook. Mark Zuckerberg screwed that up for everything. So
it's Magnum.
It's Magnum
Magnum
or something.
All right. What was the second thing we were watching last week?
So we were watching that core PCE price index. How did that come in?
That actually didn't end up moving the market. There was so much excitement with the FOMC, which is obviously the number one.
Yeah, I mean, that was a real story, right? And what was interesting is that initially, obviously, the stock market, actually, we could talk about it here, like FOMC, the markets turned up. But what interesting to me is that bonds did as well. And the dollar has been generally soft. And weakening. So it was obviously, correct me if I'm wrong, but it was a very dovish 75 basis points.
Yeah, I guess it was.
It's because I never knew 75 basis points could be, but it's the thing of it's like once the market has priced something in, it's not going to move the market anymore.
Well, there was no
surprise.
Well, the problem was that the market had gotten this idea that Powell was the next Volcker coming along. He knew there was going to be he knew the mistakes of Arthur Burns. He wasn't going to repeat them. He was going to, tighten into a recession no matter what. And this was the narrative that was pushing everyone and caused people to be at some of the lowest risk weights they've been in forever, caused the yield curve to invert. And what happened was that he ends up being causing it of that effect, and is actually changed and it said, this is two-sided risk now. It's not just a worry about inflation. There's also a worry about the slowing economy. But one of the things that I think is interesting is that people are saying, anyone who expects the Fed to tighten to loosen next year is out of their mind. That there's inflation's a bigger deal. And I completely agree. And I've been saying this, and I've been arguing this for a bit now, Patrick, is that it's a nuanced argument you have to make, because it's not that the Fed was, swinging from hawkish to dovish. That's not what's happening. They're moving from extremely hawkish to just hawkish. And that's all it took. And that's the kind of most fascinating part about this. To your point, it just shows you how much was built in terms of the Fed's hawkishness.
Yeah. And the one thing we didn't include in the top three, because it usually isn't a big market mover, is the GDP. But boy, did that involve some interesting politics as to defining two negative quarters.
But listen, what bullshit that they're trying to rewrite it and say this isn't a recession either. It's a recession, and it was kind of interesting that you saw Yellen getting out ahead of it. What was it, last week? Or maybe it was early this week, starting to sow the seeds of it. And in hindsight, it was probably clear that they knew this was coming. It was also clear that Powell realized this was coming. It's going to be tough to be raising rates like 75, 100 at a clip when you're actually in a recession, and that's the problem they're occurring. That they're facing, and it's a difficult problem, because the moment that they ease up, you see what's happening. Oil's ripping, commodities are going, stock market's going. They're right back. Financial conditions are tightening. Are loosening again. So they're right back where they started from in terms of they're going to have to raise rates because the economy might be too strong and inflation will not come in as much as they want.
It is a relatively shallow GDP contraction. So it's so really you have a scenario where it isn't severe, but it is technically two negative quarters, and I think that's where they're. But I mean, if they can keep the recession generally mild, the thing about it, we more or less felt what it's like to have a 30% contraction in GDP when they shut off the economy during COVID. So almost every recession from that point on seems mild.
Well, but see I don't know if that's going to be fair to say, because the problem about that is that the government went and did extraordinary fiscal stimulus, putting money in everyone's jeans.
Yeah,
and so yes, you're right that it was scary looking on the sheets in terms of the contraction, but it didn't feel that bad because it felt like the government had your back, which was very different to like the great financial crisis when everyone was losing their job. It didn't look like there was an end to it. People didn't understand how it was going to come out of it. But there's a lot of different nuances here. The underlying economy is stronger today than it was in the great financial crisis, and people will argue that, but I say, look at the banks. The banks are in great shape. Look at their balance sheet. Look at the consumer. The consumer is in great shape. And there's a million things. We have a problem of inflation that's going to mean that we're going to have higher rates. And that transition to those higher rates is obviously causing some problems. But it's not the same sort of economic slowdown that was as scary as the great financial crisis, I would say.
Yeah.
All right. What are we watching next week?
Next week, first thing I'm going to be watching is, ISM manufacturing PMI is coming out. And obviously, we already know that there's the negative quarters of GDP, but it'll be interesting to see whether this thing takes, does some closes below 50.
Yeah, it'll be the real, I think, thing to watch is does the economic weakness start accelerating to the downside?
Yeah,
and that'll be interesting, and it'll be fascinating to watch. Do these numbers get worse over the short run, which then makes the Fed pause even more? Yeah. Oh, back to the Fed just quickly, Patrick. The other part about this is that they still haven't done any quantitative tightening. Balance sheet really hasn't shrunk at all, and I think that's the other reason that they're shifting from extremely hawkish to just hawkish. Because even though I don't think there's that much of a worry about the quantitative tightening, they are scared to death of it. And there are some of those perma bears that have always argued that the balance sheet will never shrink again, like that every time that they're going to start trying to shrink it, it won't last only a short period of time before they have to start expanding it again. And I don't think that there's that big of a a negative stigma to that. I think it's just a reality of our monetary system. Once they start putting this stuff on the Fed's balance sheet, it's kind of stay there. I don't even want to go there, Patrick, because you realize, first of all, are you talking about the perma bears that'll talk about the fact that the Fed's going to be super easy? And then it's kind of like that meme with Anakin Skywalker and the princess or whatever, where you say where they'll say something like to the effect like the Fed's going to be easy forever. The Fed's never going to be able to shrink their balance sheet. And then Anakin, the princess says something to the effect, well, then you're going to buy risk assets, right? And there's just nothing.
You get that look.
Because if you're going to be a perma bear and say that they're never going to do this, and then you also believe that causes risk assets to be bought to go up, why are you a perma bear?
Yeah,
well, right. Isn't that kind of funny? Like, no, but you do. Yeah. You're absolutely right to highlight. It is often the perma bears who say shit like that. But then they're the ones that'll argue that the Fed will never be able to do this, and that the Fed's goosing the market. But then they'll instead of they'll be too busy fighting the Fed than just saying I'll go along with it. Now, I think it's much more complicated than that. I don't think you can do that. But it's one of those things that you trade the market you have, not the market you want. And I think to too many people, they believe the economy should be a certain way, and they sit there arguing about which way the economy can be. And I don't like getting involved in those discussions because too often it's a waste of time. And Patrick, you and I could go back and forth and talk about the perfect monetary system, but who gives a bleep? Because the reality is we're not affecting policy. I'd be much more curious about figuring out what Jerome Powell thinks and what all the members of the Fed think about what the economy should be, because they're the ones that are going to be affecting policy. So instead of arguing what it should be, I'd rather figure out what they think it should be and run ahead of them.
There you go. So let's go to number 2, gold and silver.
Oh,
and
you put it in there. You're going to goocher it.
Yeah, but you know what? I have to thank Morris because when we had him on and the topic was brought up, I immediately he's like, maybe I should go pick some up now. But all joking aside, it's a pretty surprising jump. I guess 75 basis points is super dovish, right? Like it's. But it has really reacted in the post FOMC period with a pretty significant gap. I mean, the one to me, I feel like technically the way that I would approach this, we came to a major support line in gold and silver, like there's a 2-year low down at 1680, like a support line holds, and it was more than a triple bottom, a quadruple bottom. This is dangerous territory here.
I did not realize that. I'm going to have to rethink all my analysis.
No, because the triple bottom didn't hold. The quadruple bottom held. So the triple bottom still fails.
So you're changing the rules now. You're saying 4 is all right, 3 is bad, but 4 is all right. Okay.
Anyway, but what I feel, and two negative quarters is not a recession. Anyway, so now all joking aside, we got a bounce, and whenever we basically have now done a 50% retracement of this entire drop here. So whenever you have half of the losses gained back is a very typical retracement. And so now for me, I still think that there's room for gold and silver to potentially retest the lows and establish a base over the summer. I don't think it's just going to go screaming higher in a straight V-shape, rally to the upside. Often, once a bounce like this happens, there could be a whole basing formation that develops. So you could have, for instance, gold and silver go back to their lows and create an extent. Like I still think that if gold and silver are going to go, it probably is a fourth quarter story, but it is certainly a meaningful bounce only in the fact that it's been so ugly for so long, and gold and silver couldn't even get a pulse off of the lows. And this is the first meaningful buying that we've seen in pretty much almost the entire 22 calendar year. I mean, you have to go back to those first few months in January, February, where we had that run. Outside of that, it's been just nonstop selling. And so it's interesting to see whether or not this short-term momentum, like we take a look here at silver, you can see here that also a pretty significant roll off the bottom. But look, even just before yesterday's up day, just how shit the price action was. It was awful. And so one day doesn't make a new trend in the case of this silver. So I still think there's lots of room for these to go and establish a bottom and retest the bases and stuff. But it's a pretty oversold market. And I think we're going to start seeing bottoms established here over the summer, even if it means that they have to have one more trip down to the lows.
I'm not going to comment. I don't want to gooch or anything. What are we watching? What's the number one thing we're watching next week?
Well, it's the jobs.
Oh, yeah, that is.
Right? Like, because usually it's the last ones to really start to confirm things. And it'll be really interesting to see whether or not the jobs legitimately start to worsen.
I think it'll also be interesting to see if let's just imagine we get a weak job number, which who knows if we will or not. That's a random number generator in my mind. But let's say we did get that. Does the stock market rally on the news? Is the stock market want weak economic releases?
That's
now?
really been the characteristic.
It used to not be. It used to not be, because it used to be that they were sitting there and they were thinking about Powell and they were saying he's tightening no matter what. And that really it's inflation that's driving that. So last thing we want is like a shitty economy. But now that he seems to be more in tune and is quote unquote data dependent, maybe we do want that. And maybe that weak number, we're back to the point of the market cycle where weak economic numbers sends the stock market up. I think that'll be the really interesting thing to watch.
Yeah. All right. So let's talk some charts. Let's start with looking at the S&P 500. And for me, let me just see how thick can I draw this crayon line. But like when you draw the descending trend line on the S&P, when we were approaching that 39 to 4,000 level, 3,900 to 4,000 level on the S&P, it was not only a fib zone, descending trend line. The 50-day moving average was more or less hovering there, and it was actually a pretty critical level for the market to beat, and it did. And especially it did so quite decisively on the FOMC announcement, and it really turned it up. Now, though, am not so sure that makes me bullish the market. Rather, I just believe that at minimum we're going to be in the midst of some sort of let's not call it short squeeze. Let's call it a bear market rally. I mean, we've been more or less selling the entire year. I mean, there was a little bit of a March squeeze on the upside on shorts, but generally, we've been going 6 months of sustained selling. And bear markets, like even think back to 2008, there was at least 2 or 3 periods where there were these multi-month bear market rallies that just gave everyone a break and made things look like they're turning up. And while I'm not so sure that I want to already get bullish, it is pretty clear that we're in some sort of a mean reverting bear market rally that, at this moment, 4,200 and targets like that above seem like reasonable short-term places where the market will go. I think as we get into the midterm elections and get into that approach the fourth quarter of the year, it's where we'll get the real tell as to whether there's a meaningful bottom in or whether the market has another leg down. I don't think this is the moment in the market to make that call. I think going here into August, I think little more short-term upside as the market kind of squeezes things up is the path of least resistance, at least for a couple more weeks. Any insight on that?
Well, you know me, Patrick. I've been trying to catch this knife on the downside for a couple of weeks now. I've been lucky enough to get it somewhat correct. I still think there's a lot of bears out there, and I know that the bears.
Well, that's what a bear market rally is meant for. It's supposed to last long enough to squeeze a lot of people and flip flop a lot of people out.
And I do find it interesting that some of the more active members of Twitter have pointed out that the fact is that some people have gotten bullish just because there's so many bears out there, and the fact is that there's enough of those people that are actually flipping that it might negate the whole idea that there's so many bears out there. I kind of push back on that because you have to be careful when you're looking at the short-term traders that you see on Twitter versus the long-term money. And when I look at the Bank of America institutional survey, you'll see that all sorts of readings were off the charts in terms of the amount of speculation that it was occurring, meaning that people had just taken off risk. And one of the side effects of Powell's we will not make the Arthur Burns mistake has been that basically investors have stuck their hands in their pockets. There's been no investing, and that's why it's been your call about the grind lower has been correct, because that with that Powell doing that, we just had nobody was willing to buy anything, and we've hit the point where it wasn't actually that bearish, meaning it wasn't like people thought it was going to collapse, but very few people were excited about buying anything in the market. There was no reason to buy it. It seemed like, oh, why should I buy it when Powell's just going to stop the economy? And for the first time, I think that theme has changed, and I suspect it's not going to be something that's just going to be fixed in a week or two. It's a rally that we're going to find that it's going to take a lot longer for those people to get back into the market, and we're going to climb a wall of worry. And I just want to make one thing clear, and I've been saying this forever. Stock markets don't go straight up. They don't go straight down. The usual grind around. I've always been saying this. I expected this year to be up, 8, down 20, up 5, and just grind around. And I stick to that view. And it probably surprised me a little bit on the downside. I didn't expect it to be quite as bad as it ended up being. But I would say that was because Powell had more, at the time, certainty, or at the very least the market believed he had more certainty about stopping inflation than he did, than I thought he was going to. And that caused the stock market to go down a little while. But Patrick, I just think it's going to be a grind higher, but nothing to get excited about. That's kind of how I feel.
Yeah, but this is the interesting part, right? So, okay, if we have a bear market rally that lasts up to 42 or 4,300 on the upside, it really is just a market reaction. But let's just say that there was a much more meaningful rally, and it actually started getting to 44 and 4,500. I mean, at that moment, we're going to be approaching a market that is a stone throw away from a 52-week high. And so in my mind, the thing is I just think it would send the wrong message if the market got up there too quickly, because I think that would that would spook everyone that suddenly the asset bubble is getting life again. Like if they don't take some air out of the balloon, that they're going to be running this thing all over again. First of all, I'm a seller right now on the idea that we go up to 4,500, but I think that it would if it got up there too quickly, it will create too much of it will create a divide from Main Street to Wall Street, because, like, think about it, if the stock market's suddenly repairing all the way back to the highs and there's a recession and job losses, it's going to create quite a political mess.
Well, my guess is that if we're up at the highs like that, it's going to be because we don't have a recession and we don't have job losses, and the Fed ends up having to be tighter than we expect. And I will say, if we get up there, Patrick, even though a lot of people will be bullish by then because markets make opinions and not the other way around, or markets make the news and not the other way around, or prices make the news and not the other way around, I think that at that point, I'll agree with you that it will be time to sell it again. This market's not screaming up to new highs. We're not going to have a 20% rally like we had in 2020 and 2021 or whatever those stupid numbers were, even more, 30% rally. That's not the way stock markets work. And they chop around, and when everyone's really bearish, you should be buying it. When everyone's really bullish, you should be selling it. And I think that's a return to that kind of market.
If the market got back to 4,500, it would be a trough to peak rally of 25% off of the low, right? Like it's. But
I don't think that's as unreasonable as you think it is. But I do agree with you that at that point, everyone will view it as quote unquote safe to buy. Meanwhile, when it was down lower, everyone thought there was no way you should buy it. People will be bullish at the top and they'll be bearish at the bottom. And I think that's...
Wouldn't it be interesting? Okay, so 20% off of the low is around 43.50. Wouldn't it be interesting if the market cherry picks above, or let's use our infamous animal, if prairie dogs that high, that level, and so on the headlines, everyone's it's a new bull market because we're 20% off of the lows, and everyone starts doing the parade that the bear market is over, and that becomes the sell point.
Yeah, I could completely see that. I am not some sort of long-term bull that expects that we're going to see the sort of returns that we saw before. That's not the way these stock markets work. And I think that too many, as I explained, as I keep hounding people, too many people think it's either going to go straight up or straight down. And that's just not usually what it does. There's a lot more chop. And I think that's what you can expect. And especially since I think that as we go through this change in our economy, from a disinflationary one to an inflationary one, there's going to be a major change in leadership in terms of what stocks lead and how the stock market works. So you and I have talked about this numerous times. Can the stock market hold up as the leadership is passed from those stupid fangs to whatever the new ones will be? And I think that's going to be the process. So we're going to look at the index, and the index is going to go sideways, and there's going to be all sorts of great opportunities within the stock market. And I continue to believe that. And I think people should be careful about watching the indexes and focus more on the sectors.
Right. So what's interesting, I wanted to just highlight the VIX. So really what's defined 2022 as beyond that little drop in March has been a sustained higher volatility regime where we just basically were in the 25 to 35% volatility premiums. Basically, everyone was willing to pay up risk premium. And obviously, that influences how much hedging dealers have to do when the vol levels are high. It's interesting that the last week or two has now been pretty sustained drop down to under 25. It looks like we're really heading back down to 20. even the high teens, maybe even be in stone's throw, and that could end up being a tailwind for the markets here on the short term.
You know what's interesting? I saw this great chart from Goldman Sachs that showed the implied volatility of a 25 delta puts on the VIX. And I know that's kind of, you have to think through it, and you have to go, okay, well, people aren't willing to pay up for downside protection in the VIX, so that actually means that nobody thinks that the stock market, if you assume that the stock market is inversely correlated to the VIX, that the stock market can't go higher. And I think it just speaks to the overwhelming sentiment that everyone believes that the stock market is destined to be in this bear market.
Right. So let's talk the little pullback in the dollar. I mean, I know that you've been you're strongly opinion about the yen, but certainly the dollar has been pulling back, and it is the U.S. dollar yen that really has got the bigger traction. Congrats, first of all, on making this call.
You didn't say that. Don't shh. I take that back.
Okay, I just took it back. I hope you flatten your position and you're done. All right, so but anyway, the U.S. dollar yen has been where it's been the driver, because like when you look at the euro still is stuck in the mud. So when we're talking about the drivers in the Dixie, it isn't a euro move that's doing it. Like the euro had basically a 3-day bounce off of its date with parity, and even the pound sterling, well, it's got a little bit of a bounce, but I wouldn't be claiming that that's anything meaningful. So really, this is a lot of that Dixie move is really being driven by that U.S. dollar yen move. And
I want to be careful what I say here. I don't want to get.
Okay, then let's move on. Let's move on. I don't want you Gucci.
I don't want to be Gucci my trade.
So let's move on
this
to crude
morning,
oil,
buddy.
Let's. I need more here. Hold on. Let's move on to crude oil. And what I thought was really interesting here is to me. This I don't often use moving averages, but I think in this case it's a really interesting way to do it. Put the 50 and the 200-day moving average on here, and we're right now spent over a month on crude oil. We basically pulled back down to the 200-day moving average, and it's just been trading sideways. And what's interesting is you can pretty much define the trade range. Like the two moving averages are $90 and $100, and you can define the entire trade range by that $90 to $100 range. And I think that one of the more interesting things to watch, maybe it could have been in our top 3 instead of gold, is whether or not crude oil can break out of this trade range and commit to a trend. And right now, I obviously have a slightly bullish bias to it. But it's really simple. You don't need to, you can have biases all you want, but you just wait for the technical signal. At this moment, a break of that 50-day moving average is going to be a break of a really thick crayon line drawn line down, and it's going to be the confirmation of a potential bull breakout. And I think that's a thing to watch going into next week, if whether or not the bulls can pull that off.
So here's my feeling on crude oil. I think you're better off in the stocks. I just, what worries me on the crude is the fact that the front end is just so expensive versus the farther end, like the long dated stuff. And yeah, maybe we get a break, maybe we get a bull market and it rises $5-10, but I kind of look at the stocks and they feel more down and out. They feel like they have more oomph, and I feel like that's where
but there's correlation. If oil
I get it,
is muddling and going down, those energy stocks are not going to have.
But I think that oil could grind sideways and go nowhere for.
Yeah, but a sideways oil market could be a double top retest back to 115 and then come right back down to 100, right? Like that could be one big trade range that's defined. And if you have a move in crude oil that's $10 to $15 higher to go for a double top retest, that could be truly the fuel that moves those energy stocks that you're interested in, right? And I think the correlation will be important.
Oh, I don't disagree, but I just. The front end of the curve is just so elevated versus the rest of the curve. It scares me, and even if the curve, even if the front end gave up $10, I think that we could have a situation where those energy stocks hang in there and go higher. That's how I feel about that, because the curve is just it's just so high at that front end, and it just feels to me that there's so much fear and so much worry there. Here's a question for you. What do you think happens if, let's say, there was a truce in Ukraine?
Well, I mean, obviously, the headline reaction would cause the first impulse, right? Like that, that's going to happen. But whether that leads to, like, I personally don't think. I think that Russia relations are not going to be repaired by a truce in Ukraine.
No, I agree.
Maybe Nord Stream will open up or something like that. But I think that there's a new movement to the way the supply chains will move in terms of delivery of oil and stuff. And I don't think the easing of the Ukraine situation will dynamically shift that view, but it will have a huge headline porn thing, right? Like, it's going to be everyone's going to want to immediately say, this is such a big deal that we got to put on trades that thematically work in that line. So that could cause some short-term stress on the downside.
Well, when I think about it, what scares me the most is I think that the front end is where it bears the brunt of it. And I could see a situation where the long end crude oil market barely moves. And that's why, that's what listen, I don't think it's
kind of hard for it to move. It's already down there pretty far.
So. Like, that's what, you're probably right.
Doesn't have that much more.
I'm just looking at the risk, and listen, I agree with you. I don't think it's going to happen.
The backwardation is so huge that the front is the only place where the big move could happen.
Right. And I don't think it's going to happen in terms of the Russia-Ukraine either, Patrick. I think that's a very low probability, but it's not zero.
It's not zero.
Yeah. Okay. What else you got? What else we got?
I want to talk to Widowmaker.
Oh,
like anyone who's been at the front of the curve of this has strap on the seatbelt. Boy, did that drive a few margin calls.
Optionseller.com guy is still wandered back in there.
Yeah, he must have somehow squeezed back in there.
Can you just stop and think about that guy? So for those who don't know, there was this fellow that was the option. He wrote a book, optionseller.com, that Morris has highlighted. And even at the time we were laughing about, I think that was even before we knew Morris, we were talking about optionsellers.com. Because the thing about it was he blew up his clients selling premium. He was just harvesting short data. But the funniest part about it was when he gave his big apology speech, he's wearing like a $40,000 watch. We were always joking when you've blown up your clients and you're making
you don't wear the Rolex.
You don't wear your Rolex and hop in your rolls at the end of it. I feel bad. We shouldn't be laughing about that guy.
We were doing some reverse math to just wonder how many naked calls on nat gas the guy had to have carried to cause that kind of damage. And he must have been 3x or something.
Well, and remember we figured it out that we calculated his position and we decided that it wasn't a gap that was going to crush him. He could have got out. He just didn't. He didn't pull the trigger. It wasn't like sometimes when you're short vol and then you just get a gap, like a takeover risk or something that occurs overnight, and there's just nothing you can do. It just skids through all the price levels, and your chance of actually chasing your gamma is zero. But in this case, it wasn't like that. He had multiple days where he had an opportunity to chase his gamma.
Or even just trim the position.
Right.
Take off
he
the
didn't.
leverage.
He must have just added to it. Because remember, we did the math. I do remember.
He probably did a double down. He probably did the martingale.
The old double down will get you every time.
The martingale. You just keep.
That's right. He martingaled it.
But but it's amazing how and even in the commodity markets, that one whale guy in the nickel market that got clipped. It's once you get to these periphery, I wouldn't even call nat gas periphery, but once you get to the little bit smaller commodity futures markets, you still have these big players getting clipped.
Yeah, the nickel guy though. I think it's a little more complicated than that because he legitimately had the nickel to deliver. and it just ended up being a little bit of a timing issue.
Just a little bit. Freaking.
But the guy owned guy owned a mine or whatever. It wasn't quite that bad. It wasn't like optionseller.com. That was just like, I'm going to sell these teenies. Okay, anyways, let's go back to the chart.
Yeah. But just back to the chart. It's incredible because like top to bottom, it was like a 45% drop in the span of like 3 weeks.
Yeah, and then back,
and then goes from bottom to top and does like an 85% rally off the low in 22 days. Like, so literally in a span of 3 weeks, it wipes out half its value, and 3 weeks later it goes and doubles.
Well, that's why you get the big premiums when you sell the options, baby.
Yeah, no shit. No shit. Oh, I'm getting a 60 vol on the nat gas. It's free money. It's
just nat gas is crazy, isn't it?
It's unbelievable. But you know, the interesting thing for me will be watching now how the selling, whether the bulls can defend the rally. And so my level sort of, I'm generally looking at the $8 level, but we could see short-term dips on an intraday basis down to like 7.5. But I generally want to see whether the bulls can consolidate this market up along the highs. Just the way there's no triple bottoms. If we see a triple, this approaching its previous high, no such thing as a triple top, it could be the basis from which another leg higher on nat gas can occur. But I don't want to make that call yet. I want to see how well the bulls defend the pullback here, and so maybe a week or two I'll have a little more conviction to make a call on whether there's more upside. But it'll be really interesting to see whether they can dig in and hold the line here.
So for me, I'm not trading the nat gas outright. I'm trading the stocks. I think the stocks are cheap. I think that
really. So you got rid of your strip?
Yeah. Listen, that's just too volatile. Like I can't be. That's too crazy. I'd rather just own the stocks. I think that they're on the whole.
Are you playing Canadian names or U.S. names?
I'm playing Canadian names. I'm just too much of a Canuck to not trade our names. But I just look at this and I think about the way the world's setting up, and over the coming years, we're just going to get more and more LNG, and the difference between U.S. or North American natural gas and U.S. and European.
There'll be a convergence.
There's going to be convergence, and I think it's headed higher. And I don't like just trading whether August is hot or not, which is in essence what you're doing when you're trading
at the
front month. I'd rather play for the general rise in the natural gas contracts, which I think is going to occur. You know, I saw that even our illustrious prime minister, quote unquote, whose energy policies drive me absolutely batshit insane. Even he has started to talk about LNG for the Germans. It's and if we get
it's that serious.
It's that serious. You know we're in trouble. Like, and don't get me started about our energy I don't even want to start.
Yeah, let's not go there.
Well, it's just so stupid, Patrick. I'm just shocked at the
the timing of it was absolutely perfect. Like, I mean, you could have literally faded when the Canadian government was doing their peak anti-energy policy. Was literally the moment to act.
It's like not just the Canadian government, Biden's just as stupid, and even let's just talk about Germany. You'd think that the world would look at what's happened to Germany from relying on trying to go too green and making the shift and then ending up beholden to the Russians. And you'd think we'd look at this and say, hey, wait, maybe we're not doing this right. And we would rethink our policy and take more of a longer term approach and say, yeah, maybe we want to head towards green, which is fine. I applaud the idea of heading towards green, but just to push this too aggressively and to give up on fossil fuels while the world still needs energy is crazy. And I look at it and I think to myself, you would think that we would get a situation where what's happened would shake these guys into coming to their senses and it doesn't seem to have worked. Like they need to be shaken more. Like they just
my view is sort of like, I'm not going to get into a huge rant on it, but my view is that if you wanted to make a massive global shift to, let's say, electrify the world, you need to basically build a huge global a new energy infrastructure. And the only way you could build a huge new infrastructure is with cheap energy.
Right.
And so by you attacking energy and making it ridiculously expensive, you don't have the resources to be able to build the new replacement.
Exactly, because as you're building that new energy infrastructure, it actually takes more energy. So
yes.
over the short run or medium run, we need more energy.
We need
lots
of cheap energy. Yeah, we need lots of cheap energy to build the new infrastructure to go green. And they're like, well, let's just ruin the energy companies and destroy the supply of fossil fuels. But the thing is that causes recession.
Yeah.
That causes massive shortages. And anyway, let's get
one
off
last
the
point, Patrick. And I think it's funny. We're pushing. All these politicians are pushing us to go electric vehicles, which is a noble cause or whatever, get rid of fossil fuels. But have anyone stopped to think, like, I'm old enough to remember when McGinty, sorry, that was the name of our premier in Ontario, told us that we shouldn't run our ACs in the summer because we didn't have enough electricity. Yeah. And so what I think it was hilarious, if we don't have the infrastructure, the electrical infrastructure to support going electric if we don't have the existing infrastructure to support our current load at times when it gets hot, why are we...
And just give everyone an electric car. Why not?
Yeah. Like it's just the stupidest thing in the world, and which it really, when it comes down to it, that's why we need to have nuclear and why they have to increase that.
Well, let's use that point to transition to talk nuclear.
Okay.
Uranium had a breakout candle yesterday. Or the other day, this is the
U.UN, the SPUT.
Yeah, and the SPUT basically broke a trend line. Like I'm pulling out the crayon here multiple times today, but you got a trend line break. To me, 15 is a critical level, and more importantly, I always say one day doesn't make a new trend. And so, what I really want to see is over the next 1 week that all dips are being bought, and we punch north of 15 with gusto, and that could really turn the tide. And what certainly has helped that is Cameco's earnings. They reported a positive earnings. The stock gapped up. It's beating 25, which was a key hurdle for me in terms of it beating a fib zone. It's beating that descending trend line. So uranium has got a pulse. And like I said, one day doesn't make a new trend, so I don't want to get uber excited about it. It's going to be the way that it trades in the next week that is going to really give me the real tell. But it's got to be on everyone's radar to see whether or not this is a turn point.
From your lips to God's ears.
There you go. What's also interesting, Kev, is after grains like wheat just gave everything back. The entire February-March run was completely given back down to those support lines. It's like a two-towered Eiffel Tower. But it hit the concrete floor off the other side and is bouncing. The question is that after literally wheat prices being halved off of the high, it'll be interesting to see whether a bottom is in.
Well, and from a world perspective, it's better news that has occurred as opposed to the opposite.
Yeah,
because let's face it, the last thing we needed was for food to become that much more expensive. So
yeah,
but
this makes a good case that we may have seen peak inflation because if you have food prices dropping, energy prices stabilizing and not making new highs, then the year-over-year change is going to start to stall out, and maybe that rate of change is going to peak out. Did you have a call as to when you thought peak inflation was coming? My call last month.
Well, it's listen. You go look at the swaps market, the inflation swaps market. It's occurring, Go look at 1 year swaps. They're 310 or something. I can't remember some number. So for anyone that's saying, "Oh, inflation is going to come down," no shit, Sherlock. It's coming down. The market already knows that. The real question is whether it comes down as much as the market expects, and that's a completely different point. Thing. I'm just going to go back to my politics for one more rant as you're talking about wheat. Did you see what else our prime minister did? He's going to start he's going to start rationalizing or trying to rationing the amount of fertilizer that farmers can use. Like another batshit crazy. Like, okay, we're having problems with not.
Isn't that the same agenda that's causing the Dutch farmers?
Yeah, like it's just like okay, we're having a trouble with high food prices.
Food shortages.
This is what we'll do. We'll make it harder for them to grow food. Like, gosh,
let's just bankrupt our farmers.
Yeah,
it's
and it's anyways.
Let's make it really expensive and unprofitable for them to feed us,
and then get mad at them. That's the best part. And then get mad at them when it gets higher price. All right.
Oh, brother.
Okay.
All right. Lumber prices. Will we see a triple bottom?
No such thing.
Yeah, but what's crazy is how volatile lumber truly is. Like
it's like nat gas.
It's worse.
Yeah,
it is more volatile than nat gas, and that's like crazy because the nat gas is the widowmaker. So what does that make? What does that make lumber? But obviously it's a very thin market, right? And as it approaches all of these lows, it'll be really interesting to see. Like what I love to do is put a monthly chart up. Like look at what has happened in general. Lumber.
That's hilarious. I've never looked at it that way.
Like lumber stayed in that disinflationary cycle of the last previous 2 decades. It more or less stayed in a sideways range between, let's say, 150 to 400. Let's just say you could define the majority of 2 decades of price action, and just like look at what the last 2 years have done.
Gun to the head. Insane? What does it do over the next 2 years, Patrick?
Well, I don't know. Like, you know what? Listen, obviously, I know that you and Cuppy are like home builder eyes and shit like this, and like lumber.
By the way,
generally...
I'm expecting my apology about all the flack I took about my home builder call. It's been one of the best performing ETFs out there in terms of on a relative basis, and it's
what happened was actually I took it short in a breakout trade, and I basically gave you.
Oh, that was awesome! Thank you very much.
You're welcome. Buddy.
You should have told me. You should have just journaled it into my inventory.
Yeah, we could have just crossed it OTC. Like, why bother going through the market, right? But. Anyway, the way I kind of look at it is that I don't think we're going back to 2019 prices of lumber, but we're not far from it, right? 400 is sort of the upper boundary of that range, and so I think obviously the selling is rearview mirror. I mean, the drop has already occurred from 1,300 down to 500. What, you're going to catch a move from 500 to 400? Congratulations, right? Like the easy money on the short was rear view. The question here is, when does it bottom, and when does it turn, and when does it become a tailwind for things like the housing markets and things like that?
Because I look at that, Patrick, and I look at your longer term monthly charts, and I say to myself, it's broken out. It's coming back and testing it, but chances are it grinds higher for the coming decade. That would be my guess.
Yeah. But I mean, look, generally, I am a seller. It's sort of like looking at a gold chart from 3 decades ago and said it was at 250 and it's going back. I don't think we're going back to the previous lows where lumber will hit 200 or something. So we're probably much closer to a bottom than not. Maybe there is such a thing as a triple bottom.
Yeah, maybe there is. You know what, though? You know how I make sure that it doesn't happen is I buy some lumber.
You should, yeah.
I should buy be
careful out there.
Okay, let's get going. I gotta get to work.
Oh yeah, there you go. There's a bond breakout of inverted head and shoulders. I think we have a bet to settle. We'll talk about in a bit. I just wanted to quickly hit up some earnings. All right, Walmart. What an ugly drop on earnings, but what a recovery.
Yeah, that is a wild looking chart, isn't it?
And you know what? The fact that it went and gapped all the way down to a support line and basically wiped out the entire sell cycle, maybe that's a bottom for Walmart. You know, I mean, I'm not ready to buy it yet, but if let's say they can keep all the selling contained to a few dollars on the downside and it consolidates nicely over a week or two, you know, it'll be interesting. Like its earnings are coming up here in on August 16th.
Oh, so that wasn't earnings. That was actually a pre-announcement on earnings, right?
Yeah, I think it was. Yeah, because obviously you can see the E right there on the 16th. So maybe now that all the bad news has been baked into the cake, maybe it actually by then turns bullish.
The old pre-announced really bad and then beat game they're playing.
Maybe. Maybe it is. The other touch on Tilray. Obviously, you know, there was a little bit of excitement back in March about the turn up, but it bled out to about $3. Been stuck in a range, and it's trying to move off of that bottom on earnings. It'll be interesting to see whether or not a bottom is in for Tilray. How many times do you want to touch the stove, Kevin?
I don't know.
How many times do you want to burn your hands?
You convinced me to sell some puts, so I have my puts that I'm just trying to bleed
Yeah, I
out.
have $3 puts too. It's you know, it's like as I sold some too. But it's interesting.
I just that industry is a terrible industry, and yeah, we're eventually going to get a bounce, but like it sucks. And so, you know, my dejectedness of about the pod industry is probably a good sign that we're close to.
Exactly. You've given up, so it's
I haven't quite given up, but let's put it this way: I still have it on the sheets, but I've given up hoping it's going to work.
There you go. So in the coal plays, a couple of them came out with earnings. BTU had this kind of pop and then gave a little bit back. It'll be interesting to see whether or not it can hold on to some of the gains. I think it was Arch Resources that had a disappointing turn down on that front, but a little bit of disappointments on those. Actually, we should talk about the Canadian. First of all, let's talk gold miners. Newmont versus Agnico, right? Like, what a brutal drop on Newmont on earnings.
Yeah.
Like it was like a shot to the solar plex of anyone, because it's like the big boy in the gold space that a lot of the institutional traders like to go to. And some big player had to dump this shit off their sheets. Like
I think the earnings were terrible too. Like they're really like not doing well. And you know, contrast that to Agnico, which is what you were going to point out. Everyone was scared about the earnings after the Newmont earnings, and it ended up being great.
Yeah. And so
are you buying some Agnico? You got the trade on? You're like long Agnico, short.
I've been dabbling, but you know what? But I honestly, well, no,
you make it sound like past the Great Poupon. I've been dabbling.
I've been dabbling, but I still actually think it's early. In other words, I still think that gold will probably move the most in the fourth quarter, and that anyone that's getting in here is going to still have to endure some volatility in both directions. I don't think it's an easy trade going straight up from here. But I think obviously when you have these gold miners wiping out 30 to 50% of their values in a span of a couple months, that the majority of the ugly selling is rear view mirror. And so, you know, if you're a value bottom fisher, you can start dipping, but I don't think that it's bullish just yet.
Okay.
But I wanted to just touch on one more here on Shop. The curse
Shopify.
of, Yeah, that like the curse. How dare it try to have a bigger market cap than Royal Bank?
Yeah, I think that there's somebody at DS at RBC that whenever there's a stock that gets bigger, they sabotage them somehow.
They're absolutely like what is it? 4 or 5 names that have tried it.
What are they? I was trying to remember them the other day when I on Twitter. I was going.
What was the biotech?
So it was BioVille was bigger. Which is, by the way, which is Bosch Health, which I didn't really realize that's Bosch Health, and it's having some problems right now, and it's lost some rulings. But anyways, it's BioVale. Yeah,
obviously,
there was Potash. Wasn't Potash bigger as well?
Yeah, Potash did for a while, and then they got completely Nortel.
Nortel got zeroed, which is very fitting for trying to be bigger than Royal Bank. BlackBerry did it as well. Research and Motion at the time.
Yeah, there you go. And now Shopify.
Now Shopify. So you don't mess with the lion, man.
You don't. It's a curse. Any Canadian company that has the audacity to have a larger market cap, be warned. There's a long-standing curse.
So, as a guy that cut his eye teeth at the lion, I can tell you they are formidable competitors, and it's a well-run shop. I was just thinking about this the other day. I was thinking about the curse and how Royal Bank has just consistently stuck in there while all these other places, companies have come and go, and it's just stuck in there. And I thought it's really a testament to how well-run that bank is. They're kind of just scary good in terms of their ability to not blow up and to stay there. Now watch this. I probably cursed them. They're about to blow up. There's probably going to be some wicked derivative on.
Yeah, this is your Kramer moment.
Yeah. Don't take your money is fine at Bear Stearns. Okay.
Yeah. So that's all I got, Kev.
One last thing about Shopify. They just recently announced that they're going to cut 10% of their work staff in Toronto/Ottawa. A little moment of silence for the Toronto/Ottawa condo market, because that was what was driving it. And not only that, I don't know, Americans and non-Canadians might not be aware of this, but Canadians love their rate reset mortgages, meaning that they have this. And the part about it that I didn't understand is that if you get a move higher in interest rates, what happens is they just extend, instead of actually making you pay more, they just change the amount of interest you pay versus the paying back of the principal.
So it just makes it longer duration.
Yeah, so it just ends up being that you pay more interest to a point. And this is the point this is the kind of the fact that I wasn't aware of, is that if you get a move that's large enough in the interest rate move in the front end of the curve, you actually find that they increase the payments. So what's happening is all these Canadians that rushed out in 2021 and bought houses because they were moving from the downtown in their condos to the suburbs, and there was this huge speculative kind of orgy that went on in Canadian housing. They're now finding that they're not only are they offside on their house, but their payments are going up.
Come on, carrying $1 million mortgage in Canada is not that hard, is it?
No, but listen, this is we're going to have some real pain here. Now, I know there's a lot of folks that are very bearish, and they think that every real estate correction looks like the great financial crisis. And I'll say this again, that was a very unique and special circumstance when the origin of the real estate crisis was at the reserve currency, so that there was no offset. But so I don't think that we're going to get something as bad as that, but Canada real estate is in trouble. And I was just talking about the Lion and the Royal Bank. I suspect those Canadian banks will struggle for a while because we're going to have some losses. There's going to be some ugliness in our housing market.
Come on, we've socialized that risk. It's been moved to the government.
There's going to still be stuff. There's going to mortgages is going to be the only thing that might save us is our energy. We're big energy exporters, and we're actually also big farm exporters in terms of a percentage of our economy. And those two policies are getting crushed by a dumb government. So who knows what's going to happen, but there is a lot more risk. Okay, let's go, because as I said, I'm a bit chatting too much. Skin in the game.
Skin in the game.
So now, we said this, we're taping this Friday morning, and Patrick wants to ring the register on his win.
Well, no. I mean, at this moment, I am winning, and you reserve the right that if on the close today, if it mean reverts and closes below the level, that you do get to take the points.
Okay.
Right? That is there. But right now,
so why do you,
when
right
we're recording, I'm winning.
Okay,
and
tell
you're
people the bet
losing,
that we did.
We just were over under on the on the 10-year bond futures, and we were basically on that September one, whether or not it was going to be higher or lower on Friday, and I took the over, you took the under, and bonds broke out. And so right now,
because Lacey Hunt would be proud of you. He'd be very upset if you had gone the other way
on the 1 week call, right?
Yeah. Well, Lacey Hunt is like, there's never a bond time. There's never a time not to buy bonds. Same with Rosie. Yeah. Did you see Rosenberg was just like buy bonds?
It's long bonds again.
Oh, of course. Always time to buy bonds. All right. So let me tell people about skin in the game. It's our weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Each week, one of us presents a wager and the other guy chooses which side of the bet he wants. Each wager needs to settle by next episode. Sometimes it even settles before the episode. But listen up, folks. We've changed the rules. We're going to play a match to 50 points. The loser of the match will take out 3 lucky or unlucky, depending on how you think about things, Market Huddle listeners for dinner, where they can grill him about why he had so many bad calls. Each week, Patrick and Kevin will be able to bet anywhere from 1 to 10 points on each wager. Once someone hits 50, they will win the match, and the loser needs to start figuring out restaurant reservations. Lena will figure it out, and it will be picked, one from the no stupid questions, the other one from the side effect, and then another randomly somehow. So, Patrick, what do you have for me for this week's bet?
Let's check the home builders out.
You bet.
Let's.
You just hate it. Like, you just hate sell that thing, don't you?
No, what I want to do is I just want to get you emotionally involved, and so let's do an because I mean, look, the market has a general bullish skew, so I got to give a thing, but let's does it close north of 62 by next Friday?
And where is it right now?
It's at 60.80.
You're like, that's mean. Like, you're like 62. It has to close above 62.
Yes.
Okay, I'm taking it down.
Okay. All right. How many points?
Jesus. Now I got to bet against myself. I don't know. 3. Let's just do our 3. That's going to be our standard bet. I'm going to lose this one, and then I'm going to be pissed.
All right. What was our bet last week? Lena, do you remember how many points we bet last week?
No, I think it was 3.
God, we're so pathetic. It's just like 3. Why even make it 1 to 10?
Okay, well then let's bet something else. I wanted to do 2,
let's
but
do 2.5. Let's do 2.5.
We're not going to do 2.5. I'll tell you what. We'll do 4 on the home builders, and then if I lose the extra point, I'll at least my P&L on my sheets will be doing better.
All
right, 4 it is. You shamed me into doing something different. Well done, Patrick.
There you go. Okay.
Okay, Patrick, with all the chatting that both of us did, we were running a little late, and we both have to go out and start trading the markets, and we don't want to miss the open. So we're going to skip no stupid questions, and don't worry, we'll do it next week, and we'll have even stupider answers. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter at the Market Huddle. We're there every day. Lena gets tired of talking to Patrick and myself. You can listen to us on all the networks. You know all the stuff. So, Patrick, where can they find you?
You can follow me on Twitter at Patrick Ceresna, and you can find me at bigpicturetrading.com. Kev, where can they find you?
I'm on Twitter at Kevin Muir, and you can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. Now stick around for an abbreviated after show. So, Patrick, we got to get your beer review.
Yeah.
The morning beer.
I had to be a trooper.
You really were.
To we can't break the tradition. I won't lie. I only got halfway through the bottle, but
I actually realized when you started talking about your Iron Maiden, and I thought to myself, we wouldn't have been friends in high school.
You're with you and your Depeche Mode.
That's right, exactly. You would have been hanging out in the smokers corridor, listening to getting stoned and listening to Iron Maiden and all the.
Yeah, there was back in the 80s. It was you either a rocker or you were
a new wave guy. Yeah, I get it completely. I realized you were
New Order and
you were
Pet Shop Boys.
You were the rocker guy. I was like, when you started talking about Iron Maiden, I was like, I don't know who you're talking about. Like I know the band, but I was like, I just don't know it. And I listen. I'm sure they have some good tunes. I'm not trying to slag them at all. I was lost.
And I went to see them just right before COVID at the amphitheater in Toronto. They're still rocking.
Are they the guys that the drummer lost an arm?
No, that's Def Leppard.
Oh, okay. But it's the same. It's the same kind of music, right? No, I committed a sin by comparing those two?
Yeah. Like, I mean, one is more like the Motley Crue kind of, a big hair rock versus, Iron Maiden's a little more
like the next generation of Led Zeppelin.
Yeah, like they're a solid hard rock kind of band. But they're in a league of their own. They're much different meddlers than a lot of other bands. But anyway, let's rate the beer.
Okay, go ahead.
And
you're all alone, buddy. This is all you.
I don't want. Yeah, I know. I don't want Bruce Dickinson coming after me. In fact, I want to get in his good books. So I'm going to actually give it an 8.4. It's a nice premium British beer. And I like it.
There you go. All right. Does anyone have any quick Netflix or recommendations of anything?
Oh, I watched a movie a couple of weeks ago. I meant to mention it last week. It's called Duel, like a match, you know?
Yeah.
Duel.
Premise is somebody has a terminal condition so they can clone themselves so that their loved ones don't have to suffer once they're gone.
Yeah. Is this the 1971 film?
No. No. I think this was from like last year. Seems like an
there it is,
film.
2022. Okay.
It's like,
yeah.
It's like some girl that's I don't know the actress's name. I don't think I've ever seen her in anything.
Was it good though?
It was interesting. It was definitely interesting.
Interesting.
Yeah.
She's
maybe
Scottish.
a little too artsy for me.
It's a dangerous answer when you say, "Is it good?" and someone says,
liked it. I was unexpected.
It was interesting.
It was an interesting concept.
Lena, you've just alienated all of our UK listeners.
Oh,
that's the Doctor Who actor.
Oh,
she's
the
like.
actor?
I'm supposed to say. Listen,
actress.
I'm told by my wife and my girls that I'm not supposed to say actor, actress. I'm supposed to say actor.
Oh, I didn't.
It's like police person as opposed to policeman, policewoman.
Officer.
There you go. You know.
Yeah.
So I'm doing my best here. Yeah. So that's who it is. So you just.
Oh, okay. I didn't watch Doctor Who.
Oh, Jesse Eisenberg is in it. So, anyways, what do you think? Is it good? Like, should we watch it?
I think so.
It's interesting.
It's interesting.
Yeah, it's definitely interesting. I liked it. It was unexpected.
You haven't sold me, Lena.
You're not going to watch it anyways.
Patrick watched something the other day. Well, didn't he watch a movie? Wasn't there something he reported back?
Top Gun?
Yeah.
Did you watch Top Gun yet?
No, I did not.
Oh, that was you, Kevin.
I watched Top Gun.
I don't know. Yeah, Patrick did watch something.
I was mentioning that I was. It was that murder one that.
Oh yeah, I know. He's watching Disney kid shows. Did it live up to your hype? Did you watch it? Did you finish it, Patrick?
Well,
did you binge watch Murders in the Building?
No, I did not.
Oh,
don't lie. Don't lie, Patrick. Don't lie.
Anyway.
Okay, on that note,
right,
have a great weekend, everyone. Thanks for putting up with us. And don't worry, next week there'll be a guest.
Oh.
Don't drink your beer before you go to work.
That's right.
Not like some
there
of us.
There you go. I'm going to have a good trading day. This is going to be fun.
Oh, yeah. Morning beers always make your trading day better. All right, everyone. All right. Take care.
Have a great weekend, everyone.